You too. Hopefully the angle is right, as I always say. But it's the weekend, so can't trade. I was gonna do a live trade for y'all, but obviously can't do that. So we're gonna kick it back to the basics like I've been doing the past two videos. This video, I'm gonna teach y'all about confluences, fair value gaps, SMTs. You know what I'm saying? All of the stuff that I use, at least. I can't teach you about things that I don't use. So don't come to this video expecting a unicorn strategy. I don't even use order blocks. You know what I'm saying? I don't really use none of that, bro. I use a couple of confluences and I keep it simple, man. So without further ado, this video is going to be on the shorter side, but I thought I'd just put out a video just to put out a video. You know what I mean? Anyways, throw y'all to the charts, though. Hopefully y'all enjoyed the last video. Hopefully it was helpful. You know what I'm saying? Let me know what y'all want to see in the next video. Like I said, I'm going to do a live trade for y'all so y'all can actually see what I'm looking for within the markets real time. So we're going to do that Monday, hopefully. You know what I'm saying? If everything goes to plan. You know what I mean? Win or lose, the video will get uploaded. Even if I don't take a trade, I'm still going to upload the video. You know what I'm saying? But regardless, the London session will be live on Monday. But we'll stop yapping. Throw y'all to these charts, man. Damn, this should be spot on. Hopefully my camera angle is right. Alright. We're gonna leave it like that. But anyways, just dial straight on in. Boom. Okay. My confluences. Let's start it off with fair value gaps. I kind of briefly went over them in the last video, but if you didn't, this is kind of my main confluence. Like, this is my bread and butter, fair value gaps. You know what I'm saying? As you can see, fair value gaps is a 3 candlestick formation. I mean, a 3 candlestick, what you gonna call it? Confluence, my bad. I got one candlestick right here, this little gray one, this big orange one, and then this other orange one. See how this wick, that long white, pause. But the gray wick, that's what it is, long gray wick. From there, the edge of that, to the tip of the other, let me say, the first candlestick. I'm explaining this so chopped. Like, this shit is horrible. My bad, y'all. I was just thinking it in my head like that. There are so many pauses. Let's just start fresh. You know what I'm saying? Fair value gaps, 3 candlestick confluence, right? 1 candlestick, 2 candlesticks, 3 candlesticks. From the wick of the first candlestick or the body, if there's no wick, to the wick or the body of the third candlestick, just like this green box. The green box is your bullish fair value gaps, red box, bearish fair value gaps, right? So from this gray candlestick's wick to this gray candlestick's wick, there is a gap. So that is a imbalanced price action. Sellers moved into the market too fast to where buyers couldn't get an entry in. So when you see that, you're going to wait for a price to come back up into there, dibble and dabble, and then we're either going to inverse it, which you could then look for buys to the upside, or we're going to get a reaction back to the downside from it. You know what I'm saying? And you can enter off of the reaction once you get your confirmation that we are, you know what I'm saying, continuing to the downside. Same thing for the bullish fair value gaps. As you can see right now, this is the weekend, so the candlesticks are frozen. You know what I'm saying? They're not moving. But we're coming back into a massive bullish fair value gap. And now I could see the new week opening gap coming up into this fair value gap. Honestly, I could see it sweeping this high and then coming back down. But we'll see. We'll keep back on track though. Fair value gaps, right? It doesn't matter how big, you know what I'm saying? Like, I can draw it for you. Hold on. I'm going to keep this simple. I'm going to use the rectangles to my advantage. Right? 1 candlestick. 2 candlesticks. And we got 3 candlesticks, right? Let's just say This wick comes way down here. I know it's not straight, bro. It's cool. And then this wick comes up here like that. So like I told you, 1 candlestick, 2 candlestick, 3 candlestick. First candlestick's wick to the third candlestick's wick. And if there is no wick, take it from body to body, right? Where's the gap, you may be asking? Wick to wick. Doesn't matter how small it is, because the wick could be way up here. Still from wick to wick. There is no wick. Wick to body. There's no wick on either one of them. Body to body. You know what I'm saying? It is that simple, me friend. It's just a gap in price. In other words, imbalanced price action. You know what I'm saying? And we'll go ahead and go over SMTs too. So I think I have a drawing of SMTs somewhere. Aha. Okay, so SMTs is when one pair breaks a high, but the other pair doesn't. Whichever pair doesn't, that's going to be your lagging indicator or your lagging pair. You trade that to the upside. You know what I'm saying? Look for take profit points up here or whatever else is over there to the left. You know what I'm saying? But if you're trading Forex like me, twin pairs, GBP USD, Euro USD. So let's go down to the price action so I can show y'all how similar they look. It's actually kind of crazy. So we got that right there. This is GBP USD, Euro USD. As you can see, there's a fair value gap right there. This low, Friday the 22nd. Friday the 22nd. Right? Wednesday the 27th. Wednesday the 27th. This low did not get swept out on GBP USD. It's a bullish SMT. We moved up. It got swept on Euro USD. We moved up. You know what I'm saying? This is also my strategy, a liquidity sweep. This is a low point, a market structure point. You know what I'm saying? We swept it, moved up. It's also a bullish SMT. Pretty simple, my friend. When one pair breaks a low or a high and the other pair doesn't, that pair that doesn't is your lagging indicator. You know what I'm saying? And SMTs are kind of more rare than fair value gaps. That's why if you see an SMT, you shouldn't take it lightly. You know what I'm saying? Fair value gaps, they go either way. Because fair value gaps are also meant to be inverse too. Like if I was to trade this right now, I would wait for price to come up, tap into this fair value gap, and then I'm looking for sales, right? But to be fair, once we move up from this fair value gap, it is no longer valid. Like this is no longer valid, this one's no longer valid, this one's no longer valid. The only one that's valid left is this one right here and this one right here. Even there's a little green one in there, that's invalid because it got tapped into. You know what I'm saying? So they're meant to be inverse. And I would gladly inverse them. And when they do, that's either going to let you know that you can, you know what I'm saying, start looking for opposite, you know what I'm saying, sides. Or probably in your strategy. You know what I'm saying? You probably want that fair value gap to get inversed. Same thing. SMTs. It's another one. That's what I use. SMT divergence. When one pair breaks a high or low and the other pair doesn't. The other pair that doesn't, it's a lagging indicator. You know what I'm saying? That's really all the confluences that I use, man. Fair value gaps and SMTs is my go-tos. If you want to consider liquidity sweeps as a confluence, you can. But that's my home base. You know what I'm saying? That's like my heart when it comes to trading liquidity sweeps. but it's also could be SMTs too, depending on which pair you're looking at. Because there will be times where one pair will sweep a section high before the other pair, and then both pairs just rip to the other side. You know what I mean? But I hope you were looking at the right pair. But I'm not gonna drag this out for too long, because that's really all I use is fair value gaps and SMTs, man. And like I say, liquidity, sweep of highs and lows. I already explained that to y'all in the last video. I think I did at least. If not, comment down below and I'll make a video on liquidity. But this video is about SMTs and fair value gaps. So hopefully y'all found this informational. Hopefully you enjoy. I'm gonna go ahead and edit this video and get it straight out to y'all boys, and I'm gonna catch y'all. Oh. Me. But yeah, man, that's all I got for y'all. It's really not much to explain when it comes to this shit. The confluences are pretty easily, you know what I'm saying? But if y'all need more help, y'all know where the social is, man. Y'all know how to reach me. Just tap in with me and I can help you out. But y'all boys stay blessed, stay motivated, and stay disciplined. And I'll catch y'all in the next rip.